Good morning, everyone, and welcome to another edition of Bitcoin Update by your host, Bleeding Crypto. Today is Thursday, March 2nd, and we're going to take a look at Bitcoin. This is a part of an ongoing series that I've been doing. Every few days, I look at Bitcoin. I give you guys an update of what's going on. And so this is a continuation. Hopefully, you guys are following through the different episodes. So when we have notations like this here, end of possible double top, you know what it's referring to. If you haven't, listen to the last one, and this way you'll be able to catch up. Remember, you can always listen to it at 1.5 speed to speed things up, make it go a little bit faster. And also, if you can support the channel by hitting the like button, I'd greatly appreciate it. So let's go ahead and get started with our analysis today. So as you can see right now in the 4-hour time frame, I'm not going to go any lower because it's just more chop. There's not much going on. So the 4-hour can really put things into perspective on how tight this range is, how small this range is. We have the range from the 200 EMA up to the prior support. That's it. It's a very close range, and it's even getting tighter and tighter as the price action continues to just bounce between these two areas here. We had this notation from the last video, end of possible double top, and that was in the event that the market got ultra bullish and we were able to at least make it back up here and possibly create a double top. Then if that was the case, if we did not break further up and we did do a double top, this is generally the area 786 is a general area where I look for the end of a double top before creating a bear flag and a continuation of that double top. And that's a very common pattern when you look at double tops. You have a double top and it usually ends at 786. Sometimes it ends where it began, but most of the time it ends at 786. Then it bear flags, and then we have a continuation down. So we didn't hit that double top there. We didn't come and sweep this liquidity here. So this will still be in play. I'm going to leave this here. I don't want to crowd the chart with too many lines and notations, but for now, it's still valid. We still have a chance to go up here until we break down here. Obviously, if we break down here, then we will erase this on the next session. If by then the next video update, if by then this happens, then we'll take off this notation. We'll take off this fib here, and we will start our new plan of what to look for in the coming subsequent days. So for now, everything pretty much still stands. Unfortunately, there's not much to report. I told you guys I want to do this every 2 to 3 days. So I've been waiting. The last update I believe was Monday. It's been 3 days. It's now Thursday. So I want to be able to at least be able to update you a little bit. Let's see where we're going. Unfortunately, right now at this time of the market, it's one of those times where we're going to need a lot of patience. I do want to show you 2 key data points on the heat map for the spot market and on the heat map for the liquidation market. So those are going to be coming up real soon. I want to show you that. I just want to talk to you about market structure on higher time frames real quick, like the weekly. I know these are going to be local updates, but I just want we always have to keep in mind what the scenarios could be. And right now, that weekly time frame we've been talking about, this bear divergence, is not looking very good for the overall picture, picture of the price action for Bitcoin right now. We have a higher high on the price action, and we have a lower high here on OBV. You can also see the double top on the RSI, but more here on the OBV with that bear divergence really confirming on there. So we have a tweezer top here. We have a follow through candle here. We still have 3.5 days left on this weekly candle. A couple of things that I'm looking at are basically 2 things. I'm gonna hide the drawing for a second. I'm looking at this separation between the price action and the 9 EMA. The 9 EMA to me is a level that I watch very closely. Every trader has their own level of low EMA time frame that they look at. So for instance, I look at the 9. I know traders look at the 8. Some look at the 10. Some look at the 12. I happen to like the 9 in the way the price action respects the 9. Whatever your price action for that low time frame is, we all have one. Pay attention to it, because that does tell you a pretty good story on how well price action is either supported by that time, by that EMA, or if it acts as resistance. And for instance, here you can see where this 9 EMA acted as very tough resistance. Even though we were rejected off the 200, we were rejected off of this 9 EMA to begin with. We never were able to cross it. When we came back down, look at the way we confirmed it right in this candle here. Then we got rejected off of there. We came up here, candle closed right barely above it, and then again we had that rejection. Then when we finally broke above it, look at the way we bounced when we came back down and we confirmed that 9 EMA as support, and we started to move back up. Now we're stuck in an area here where on the high time frames does not look good, guys. Tweezer top, follow through candle, 9 EMA, and the price action has a 5% range, which is, that's a pretty decent drop for Bitcoin. So the first thing I'm looking for is if we are going to come down, does the 9 EMA hold like it did here for that bounce? Could be. Now, if it doesn't, what's my next level? My next level is going to be at basically this line right here at 22,758. If I'm looking at the weekly time frame, you can see where it was support, 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 resistance, resistance, support, resistance here on this candle close. So we've got a few touches on there, and you could adjust this candle probably a little bit lower into maybe this area here to encompass, but this is a good general vicinity, so I'm just going to leave it alone. Going back to what I was saying about the heat maps, let's take a look at the heat map. First of all, let's look at the liquidation heat map for HyBlock. If you guys are interested in subscribing to HyBlock, guys, I have a referral link on the description of the video below. So I would encourage you to use my referral link. You get, I believe you get like a month off, and I get a month off as well for my subscription. So it kind of works for both our mutual benefit. If not, then that's fine. But just as a courtesy, it'd be nice if you use my referral link. I would appreciate it. Now you see the heat up above here. So the heat continues to build on here. Now, how does this heat build? Well, this heat builds as people get bearish and they open more short positions. Remember, every time you open a short position, even if you don't use high leverage, and these actually usually represent most people who short, they use higher leverage. They don't just use a 1x. But just say even if you had a 1x, you're going to have a liquidation point at some point. These here tell you if the price action is here. It's usually a good way of looking at it. When your price action is here, you see this area right in here. This is most likely going to be something like a 50x, 100 or 50x right inside of here. It doesn't take much to liquidate you when you're using very high leverage. The higher the leverage, the closer this heat is going to be to the price action. Things like this are probably going to be more like a 25x, and you can confirm that by looking at the actual. Here, let's look at. We'll touch on it real quick here. There's nothing really much to talk about, so at least I can give you a little bit of education on HyBlock. So when you look at this chart here, these series of lines and color lines all have a meaning. These blue are 25x. These teal color are 50x. The orange is 100, and to the downside, these red ones are 50. These light green ones are anywhere between 125 and 150x leverage. For some platforms do offer 150x leverage. So you can see, for instance, this liquidation. I'm going to zoom in here just so you can see a local. Let's zoom in here. So you can see that this here, $85.75 million contract at 150x leverage will get liquidated at 23,940. This one here is a 30 million contract. If the price goes up to 23,447, boom, that gets liquidated. So you can see the way these lines here. Actually, let's look back here. Let's go to the left and where my cursor is, and let's just study this just for a second. You see this price action dropping. As this is dropping, look at the lines to the right. These bubbles to the right, these are contracts that are basically trying to piggyback off of this drop. So what they're doing is they're saying the price is dropping. Let's open a $20 million short, 150x leverage right here, and we're going to get paid. And as they open more and more of these lines, what it does, it almost guarantees that the price is going to come up there quickly. This is the 1 minute chart. So just to give you an idea of how quickly this stuff happens. This is the 1 minute chart. So you can see as these contracts open, look what happens very shortly afterwards, after these contracts open. Price just goes up. Look where the price stops. It literally stops after these contracts, just above where these contracts get liquidated. Oh, I must have reset it. Let me go real quick here. I don't know if you guys caught that real quick. Let me just go real fast. Okay, see, look at the way these contracts, it went right up to this contract and then it came right back down. So that's how the market makers make money. When people try to outsmart the market, they will come back and they will knock you out. And then they come right back down to regular business. And this is how the liquidation heat is created. So let's go back to the liquidation heat. So going back to this chart here, as people open more and more positions, this heat will increase or decrease depending on whether or not they got liquidated. So that's what a lot of this heat represents. There's still area for market makers to make money if it moves up here. Now, this is the most important thing you need to understand about this. This does not guarantee that the price is going to go up. This could have the most intense yellow heat up here, and we can still just nuke down. We have jobless claims data today at the end of the New York session, so be careful with that. Here's the real interesting part about following all of this data. Today, there's jobless claims report. And you know, when we have a claims report like that are tightly correlated to what the feds are going to do with interest rate because they take those types of data into account. Look what the market makers are doing on the heat maps, guys. This is really interesting. Today, they shut off all support. They remove support on the day that data is coming out to allow for those massive liquidation wicks to happen. They don't want to support the price. Isn't this amazing, guys? On the day. So I'm going to zoom in just a little bit. I'm going to show you what I'm talking about. Look what they did. We've had this incredible heat here. So this heat represented orders, 600 orders of Bitcoin. And today, when that report comes out, they shut it down. They went from 614 to 34. To 34 on the day of. And look at this heat right here. We had $558 Bitcoin order at 24,600. Right now, it went down to 80. So we went from market makers to just retail. So you can see, look, again here, 577. They turned it off. They went down to 100. So they're turning off the heat up here. Most likely is to allow those wicks, those liquidation wicks, to flow freely without them putting any type of ceiling on that price. This shows how they control the price. This gives you a good representation of where the price action likes to go. You can always look to the left and look at some of this heat and look at the way the price action gravitates to the heat, bounces off the heat. See this? And then pushes up. Then they remove the heat and then they move it. They adjust it. They bring it up and down. So all of this stuff here is, look, all this shut off. Look at this major support here. 1.1 thousand Bitcoin got turned off. Look at this. Got turned off right there at 22,200. Isn't that amazing to see the way they just manipulate the market? This is not illegal, guys. This is how the markets work. There's nothing illegal about this. This is the way that even the broader markets work. They're going to try to debate you to buy or to sell. For what? For them to make the most amount of money possible. That's what the markets are designed for. The markets are not designed to make you money. The markets are designed to take your money. Your job is to try to look at this information and find the small clues that allows you to protect your capital. Number one job, protect your capital. As you're protecting your capital, you may be able to make some money. but don't come into this market thinking that this is a casino game that you're just going to come in, throw a couple of bucks, and you're gonna hit 100x. It doesn't happen. You hear those stories, guys, and when you factor in the millions of people in this space coming in and coming out to the ones that hit those 100x, it's very few. It's very similar to the odds probably of hitting the lottery. You hear people hitting the lottery twice a week, all over the world, people are hitting the lottery. But when you factor in how many millions of people are playing, it's not really as great of odds as you think. Well, excuse me, it's not a great of chance of winning as you think. The odds are always going to be against you. So it's really interesting. Again, when I saw this morning here how they're turning off the heat here, and then we have news. It's no coincidence. They're definitely doing that for a reason. So going back here, guys, to the price action right now, we're just going to have to. I don't think much is going to happen. I mean, look at this tight range. This is a 4-hour time frame. Look at this tight range. This is really ridiculous. Look at this range is basically from here to here. You've got not even that. I'm being generous with this. It's probably more like 2.5% range. That's all it's doing on 4-hour candles. So your best bet right now, guys, is to go do what you did before you got into crypto. Set some alerts. Wait for those alerts to trigger, and then come take a look at the market. See what the market is telling us in which direction it's finally breaking out of. But until it breaks out of this range, there's really not much you can do, guys. Don't overthink it. These guys out there that are telling you they're killing it, they're not. The only thing, can you make money? Absolutely, you can make money. You can go down to the 1 minute time frame. You could find a range that you're in. You want to try to play this range? Go ahead. That's a lot of work for very minimal reward and a lot of risk. But could you play it? Yeah, absolutely. If you know what you're doing, if you know how to scalp, you can. You go there and work for 0.2% and still have to pay fees. Yeah, if that's what you want to do, you're more than welcome to do that. I'm not going to mess around with this. There's no point. You don't have to trade every single day. Wait for a setup to come up. Wait for some sort of direction. But you try to go into the market and do this when you're just, when you're not really a scalp trader, it's really difficult, guys. You can get really chopped up. So don't be impatient. Bull market is coming. I don't think it's coming anytime soon. I think this year we're going to find a bottoming. We're going to find what I call the recovering. We're going to be recovering out of the bear market. So 2022, 100% was the bear market. I don't think, even though we are still technically in a bear market, I label it a little bit differently. I label 2023 as a recovery market. So that's just my own internal label that I put on the market. Just from looking at prior data, you have that year that happens right before the halvening. That's usually the recovering stage. We are at that recovering stage. This is where we're going to find a bottom. This is where we're going to confirm the bottom. This is where we're going to be able to start putting our orders in and start getting accumulated on whatever interests you, and whether it be just Bitcoin or Ethereum or some of the majors or even some of the small cap coins. This is the year to do that, to accumulate your bags. And 2024, 2025, in my opinion, is going to be that next cycle. And why? Actually, it's not even my opinion. It's fact. It's 100% fact based off of the halvening. So based off of the halvening, 24 and 25 will be in a bear market. Be careful with those accounts out there that tell you, oh no, we're not going to see a bear market for 5 years. They don't understand Bitcoin. If you have an account that tells you that we're not going to see a bull market for another 5 years, they don't understand the way Bitcoin works. Be careful taking advice from people like that. All you have to do is open up a Bitcoin chart, go to the Bitcoin index, that's the aggregated all the way from the very beginning, and take a look at the 4-year cycles of the halvening. You can Google the halvening dates, plot those on your chart, and you can see you are guaranteed for a bull run 24, 20, 25. If you don't believe so, do this. Put your laptop away, put your wallet away. Actually, better said, don't put your laptop away. Put your wallet away. Look at what happens at 2024 and see if I'm right. And if I'm right, on the next cycle, which would be 2028, 2029, then you can play. Then you can say, okay, you know what? I tested the theory out. Yes, we 6 months to a year before the halvening, we start finding a bottom, we start accumulating, and for that halvening event, for those 2 years, we have a bull market. So don't take my word for it. Just put your wallet away. Watch it happen. Write it down. Measure the moves. See for yourself, and then on the next cycle, you can go ahead and you can play the market, and you can have that real time data as you're watching the bull run happen. You can have more confidence for the next cycle that'll be coming up. I think that's going to be the best way for you to approach the market, so you don't get so you have that full confidence that before the halvening there is a confirmed bull market. So it's up to you how you want to play it. You just need to make sure that you have that capital available to you before that bull run starts, so you're not chasing it and you're accumulating like most people who've been in the space for a while. Everyone have a really good day, and I will update you guys on Monday. Let's do that. Today's Thursday. Let the weekend, nothing really happens on the weekend. Let Friday, Saturday, and Sunday pass. I imagine we're going to see some volatility tomorrow because the jobless claims report at the end of the session, which means that the market will come in on Friday and then react to that data. And Friday and Saturday and Sunday is usually pretty dull. So Monday, let's have another show. And we'll see where we're at on Monday. Have a great weekend, everyone.